Hey everyone, welcome to another episode of AQ Markets. So today's topic is going to be what industries and specific companies did really well over these last 3 months during the COVID-19 pandemic when everything was crashing around it. So as we all know, the global markets are in turmoil, they're falling, they're very volatile, but for the most part they haven't really recovered yet, and that is basically just come from the fact that the whole consumer demand has just been erased. People are cooped up in their homes, they're not flying anymore, they're not booking hotels, they're not buying things, people are losing their jobs. There's just a lot of industries that are getting impacted by this, as shown in the market's history and as shown in my previous videos. So just some examples of some industries that are getting destroyed during the pandemic is airlines, for example, because no one's flying, and sometimes when they are having these flights, there's about 5 to 10 people on them. So the operating costs are extremely high and the revenues are not covering this at all. So this is a complete cash burning situation for the airline industries. Additionally, we have hospitality companies and tourism companies. No one's traveling, no hotels are being booked. So they're also just burning through cash with all these idle buildings that are taking up a lot of real estate and potentially could be leased. So they're making these payments on buildings that aren't generating any income. And then we also have, in some cases, the residential and commercial property companies, because a lot of these mortgages have actually been frozen. So mortgage payments aren't being met, and the payments that aren't frozen, we have people who are losing their jobs and businesses that are also going out of business. So a lot of these payments aren't being fulfilled. So this industry is also under some extreme turmoil. So with industries all just going kaput, this really begs the question, what industries are doing well? So first, let's understand how the whole lifestyle has changed from the typical person. Before the COVID pandemic, people used to go to work, drop their kids off to school, go shopping, see a movie, go out to restaurants, etc., etc. Now, we are cooped up in our houses, we're not leaving, we're working from home, our kids are learning via virtual environments on their computers, and we need to do a lot of our shopping without trying to be exposed to too many people. So let's get on with the first industry that is doing exceptionally well, and that is consumer staples. Consumer staples are basically your grocery stores and your daily essentials and companies that manufacture it or sell it. And at the end of the day, you need to buy these things. Consumer staples, consumer essentials, no matter what, if you're making $5 a day or you're making $100 a day, you're going to be buying these things. So let's look at what happened when the pandemic first hit. People created a hoarding mentality. They were going to Walmart, Publix, grocery stores across the nation, and they were just buying as many things as they can in the event that everything becomes closed, so at least they had some sort of like reserve or ration. For example, toilet paper. I have no idea why the toilet paper was a big deal and people were reselling it for ludicrous prices, but that's besides the point. So consumer staples have done exceptionally well because not only are they hitting their normal targeted rates of revenues, but they're actually exceeding it because people are doing this hoarding mentality where they're just buying more than they actually need. So certain stocks like Walmart and Costco and Johnson & Johnson and 3M, they've actually done exceptionally well during these times, and in some cases they've hit record highs. And that just comes from the fact that their demand has skyrocketed since the pandemic started, and they are more than exceeding their revenue targets for the recent quarters. Now, since we're all cooped up at home and we have to somehow figure out how to work from home and make sure our kids are still being educated, what could be doing well with respect to that? And that is technology companies that allow this to happen. A big boom in tech companies has started with this whole work from home softwares and work from home lifestyles. The biggest example of that is Zoom Technologies. They have more than doubled their value as a company just this year. So a lot of these tech companies that are either developing products or have products or softwares that allow us to move forward with this new work from home lifestyle, they're going to be doing exceptionally well now and in the near term, and potentially even later on as our lifestyles potentially evolve into becoming more work from home, as we realize that we don't need to go to the office 5 days a week. We can actually do a lot of the normal tasks we do at work from home, in some cases more efficiently. We look at shipping and fulfillment companies like Amazon, who are also doing exceptionally well. Amazon briefly lost their trillion-dollar status as a company when COVID-19 first struck, and then they quickly regained it back, plus some more. And again, that just comes from the fact that we still need to buy things, and in some cases there's technology and stuff that we need to buy to help us adapt to this, but we don't want to go to Best Buy and we don't want to go to the stores because of the exposure to people. So we just Amazon it and it ships, and we don't have to come in contact with anyone. If you want, disinfect the box on the outside. So now when we have a pandemic and we have a disease or a virus, we need to cure it. So that is where the pharmaceutical industry comes into play. Pharmaceutical industries are working tirelessly right now to develop either a treatment, a cure, or a vaccine for COVID-19. And this is where a lot of money gets pumped into them and a lot of expectation that they are going to cure it comes into play. A lot of the times companies are valued on their projections of cash flow in the future and what people expect the companies to do. And with pharmaceutical industries, they're a lot more volatile in this kind of scenario because if they claim that they have a treatment, their stock skyrockets because of the expectation that they're going to be selling the treatment or get government contracts to produce it. But then if they fail clinical trials, then their stock goes down pretty sharply. So you're going to see them kind of go like this over the next few months. A case example is Gilead Sciences. I believe that they had one trial of a medication, so when they announced that they're going to be doing it, the stock went up like 5 to 7%. Then it failed, stock went down 5 to 7%, but then they had a new one, the stock jumps up 7%. So right now they're stabilized, but over time you're going to see a lot of these key pharmaceutical companies kind of be volatile in nature, but the expectation that they're going to do well is what's going to allow them to kind of weather the storm as far as the stock price is concerned. So why am I talking about this? And the reason is that, again, when you structure a portfolio, it is very important to have exposure among many things in order to diversify your risk. Now, as I mentioned, I personally construct portfolios for the long term. I'm not looking to make any short-term gains, but if you would like to have a more stable portfolio going on to the next year, then it's really important to incorporate these industries. Sure, you might have missed the opportunity. There was a huge bottom in the market, which was between March 18th and March 25th, where everything was at its low, and they've recovered since then. And in some companies, they've actually done better since before COVID-19 struck. But they're going to continue this trend. They're going to continue to stabilize. It might be a good way to park your money, and it might be a good way to make slow but steady gains over the rest of this year. I'm not saying to invest all of your portfolio in it hypothetically, but it would be really important to gain exposure to this as it's a more safer side of investing for the near term. As always, thank you so much for watching. I hope this video added a lot more color as to why certain companies and industries are doing exceptionally well while we have the rest of the stock market on fire. In my description below, I'm going to include a few stocks that hit all-time highs just in this last quarter of the year. And if you have any questions regarding these industries or any other industries that I didn't discuss that you would like to know my opinion and thoughts on, please leave a comment below and I'll get back to you as soon as I can. Thank you very much. Looking forward to the next video. Don't forget to share the video with a friend. Thank you.